Michael Burry just revealed a frightening crisis. Nobody knows what Michael Burry sees, but the world will soon awaken. It took a decade to overcrowd the theater. Nobody gets out in a year. While it took years to fill the theater, the collapse will be sudden and brutal. Some individuals will be left behind, and it's their own fault for not catching on. Nobody knows what Michael Burry sees, just like nobody knows what happened to the economy in 1999 and 2008. Michael Burry recently dropped a bombshell on one of the most shocking crises in the history of the planet, and now the world is set to wake up soon. When it comes to investments and financial predictions, Michael Burry is simply a man to reckon with now, despite the fact that he is well known for being a controversial figure and is reviled by a great number of people. Even Elon Musk, the world's richest man, doesn't really flow with him for reasons that are best known to him. Burry is known to make wild and strange financial predictions on Twitter. He does not really keep sensitive tweets because he tends to delete his tweets minutes later. However, with the look of things, Burry has been right as he's predicted the severe inflation we're experiencing today. Even if we don't talk about the current inflation, what about the massive financial collapse prediction that we might encounter very soon? Who is this man, and how does he know these things? Is he a financial prophet, or just an ordinary man who has a knack for making accurate judgments about things? The most recent past, the current state of the economy, as well as Michael Burry's forecast for the future in relation to the current economic crisis. Watch the video all the way to the end because there's a lot to cover, and trust that it's going to be interesting. Now indeed, Michael Burry has made a big name for himself within the investing world and beyond over the years, as his prediction of the subprime housing market crash was the basis for the movie The Big Short. Because of the prescience of his investment and the additional attention he gathered, many investors like to track Burry's portfolio moves and worth towards his investments. Michael Burry has made a big name, for we know him to be a man of accuracy and precision in the economic world. There was a time when Michael Burry accused the Biden administration of redefining what qualifies as a recession and denying that the United States economy is just days away from officially entering into a deep one. Michael Burry believes and affirms that a worldwide recession is just around the corner, and he has some very valid arguments to back up his claims. Despite years of warnings, investors will be shocked. The government messed up, but that's not what we will tell you. The FED printed $5 trillion, which boosted prices. Consequently, inflation is 8.6%. Burry disagrees with the mainstream media over short-term inflation. During the pandemic, the FED printed $1.5 trillion annually, but now the opposite is happening. The FED plans a $1.1 trillion annual money supply decrease. If prices soared after the FED issued billions, prices should fall after it withdraws trillions. Supply networks are catching up to demand. In recent years, supply chains have been under strain, but that's changing. The globe hasn't ignored the pandemic. We're naturally adaptable. There are new supply chains and businesses have improved. Building more container ships, all-out supply crisis. In the last few months, 13 more container ships were ordered, bringing the yearly total to 239. This is already the 5th biggest year on record for container ship orders. This much growth is unsustainable. An analyst said the outlook size is concerning. Inventory expansion shows the struggle to produce supply. Year over year, wholesale inventory is up 24%. Consumers just aren't spending as much with this new supply. The Michigan Consumer Sentiment Index is at a 15-year low. When items are oversupplied and demand is low, prices fall quickly. Burry foresees a supply oversupply. Retail stores with too much stock and not enough demand have a supply glut. A supply glut will force retail establishments to introduce huge sales and lower prices. That's what Burry means by Christmas in July. Businesses make too many things for Christmas sales, and only a price cut will sell these things. July 2022 was a bad early Christmas. Too many goods on the shelf reduced company profitability, leading to layoffs and wage cuts. Burry described this as the Bullwhip Effect. A bullwhip effect occurs when a demand increase prompts suppliers to overorder. Companies order extra supplies as a safety net. When multiple businesses order extra, the supply can become unhealthy. Retailers, wholesalers, and manufacturers comprise the supply chain. Each step of supply chain overordering leads to extra orders. Let's imagine Walmart sells 90 cereal boxes per day instead of 30. Walmart will order 150 boxes of cereal per day due to increased demand. This allows Walmart 60 extra boxes per day if demand rises. If Walmart orders 150 cereal boxes daily from General Mills will order 250 cereal boxes each day due to increased demand. The cereal maker will get 250 orders and produce 350 boxes every day. 90 boxes of cereal became 350. We have 260 extra cereal boxes every day, and the demand bump could end at any time. Because of a sudden grain supply rise, firms must decrease prices. This reduces supply and retailers will reduce orders. When cereal runs out, merchants will scramble to buy more. Walmart will order more cereal as cereal prices soar. The unusual supply deficit has retailers ordering boatloads of supplies. This has led to a giant bullwhip. Bullwhips cause supply gluts. Burry knows our upcoming supply excess will cause disinflation. Inflation will soon decelerate, contrary to popular belief. Due to the bullwhip affecting disinflation, the FED may initiate quantitative easing again. QE will stimulate consumer demand and generate a supply shortage. Due to the supply deficit, the FED will withdraw money from the economy to stop inflation. The only concern is that retailers will once again order extra supplies and produce the bullwhip effect again. When there's too much supply, prices drop and the FED resumes QE. This would artificially inflate consumer demand, causing a supply shortage and another bullwhip. A scary cycle keeps the economy in bullwhips. We're in the bullwhip phase of this cycle and will see one of the worst crashes ever. The bullwhip effect is simply created by human nature and cannot be stopped regardless of how well known it is. Burry is effectively pushing for a big bullwhip throughout the entire economy. Bullwhip doesn't simply encompass Walmart and Target, it might encompass aviation and cell phone production. Burry's tweet included a beer game website. Contrary to what you might be thinking, the beer game has nothing to do with drinking beer. Beer game simulates beer's supply system. Beer game has 3 units: wholesaler, distributor, and brewer. Students in the game are broken up into 3 groups, with each group being a unit. The purpose of each unit is to obtain the biggest profit possible. In-game inventories are almost usually excessively high. This is because each of the 3 units constantly order additional beers, which accentuates the eventual consequences. The beer game demonstrates the bullwhip effect. Retailers are already seeing the bullwhip effect at play right now. Walmart's stockpiles in the first quarter of 2022 were up 33% year over year. Home Depot's stock rose 32%. Walmart, Home Depot, and Target had only 2 to 4% year-over-year sales growth. The bullwhip effect is evident as retailers' inventory grow 10 times faster than sales. The bullwhip doesn't occur every decade. It's a recurrent cycle that worsens with time, with long-term pricing rising. In January 1973, cyclical inflation reduced the dollar's spending power to 35 cents. Bullwhips generated price fluctuations. One last price increase at the end of the cycle never saw a decline. Long-term prices rose despite short-term fluctuations. The inflation rate was cyclical, demonstrating the bullwhip effect. As inflation grew, the bullwhip effect grew. The 1970s saw soaring prices. Inflation remained positive, therefore prices never fell. Last bullwhip's inflation never returned to 2%. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.